It's Sunday, the 23rd of July, 2017. This is a chart update for the US dollar gold price and related markets. It was a strong performance for gold this week in US dollars, up from sort of the lows near 1200 last week and closed 1255, a nice high close there on Friday. And it's kind of been 6 weeks of pretty poor performance since the highs near 1300. It's come up toward that level that's been important for a long time now, which is this sort of the Trump win, the election win was around this 1260 level has been a key psychological point of support and resistance. The other key level is 1200, which I've talked about many times as the sort of the psychological level I'm looking for as the hold of this bull market, which I think began in early 2016. And while it held that, I'm still in that frame of mind. I think there's quite a bit of sort of just general malaise in the markets, given it's the US summer holidays now, and that has a big effect on the US dollar gold market and on general equities and gold mining shares. So there's a bit of lack of direction, but I think it was bullish that it's held that level. I think we're going to struggle around this 1255, but this 1260 sort of 1270 level again. I'm not sure if it's got the momentum to get through there. The US dollar has been extremely weak for a couple of months now. If you go back and look at some of my videos from early 2017, I was talking about this head and shoulders top as it was forming, as this right shoulder was forming, and thinking, does this look like a major top in the US dollar index? And it's really, once it broke through those sort of dual trend lines there, it's just hasn't shown any strength whatsoever. And I think we're getting toward, if you look at this, I've had this chart for probably 3 years now with these key levels on it, and there's a key sort of level around this low 93, and we're getting toward that now, and that corresponds to previous highs in the dollar index near sort of in the midst of the financial crisis, which is sort of when you saw that perverse outcome of money flowing back into US dollar, despite the fact that that's where the major issues were, that sort of safety trade, I guess. So I guess we're getting toward that level now. US dollar, the index is extremely oversold on a daily, and I think probably on the weekly chart as well. But it's its most oversold it's been in many years, or at least in the last 2 years. So I'm thinking this is due for a bounce. The thing that I'm still bullish. I'm still bearish longer term on the US dollar. A few months ago, I talked in one of the videos about this period. This orange box corresponded to the last interest rate hiking cycle in the United States, leading up to the GFC. So they hiked from 2004 to 2006. I think they hiked about 3 or 4% then. And this trend was broken, and you saw this big move down in the US dollar. And I think it's been pretty similar to what we've had now. And it had that, so it was kind of pretty similar move. Had a small bounce and a bit of consolidation, and then just kept trending down. And that's the reason I like that analogy was also the fundamentals sort of marry up quite well there. That I thought maybe the massive indebtedness of the US consumer and of the US stock market being at all-time highs might be playing out again, and we could see that protracted weakness. That's my longer term view. So that US dollar strength has really been driving the Australian dollar US dollar pair. So the Australian dollar had a real run in the last couple of weeks and is back up toward 80. I think it might have touched 80 this week. I got almost to 80, about 79.9 there. And there's a few things in the media about the Australian dollars going back up to 85 cents. All this stuff from a few analysts, and the same people were talking about the Australian dollar going back to 70, not much more than about 6 weeks ago. So I guess that it just they're weather vanes. They'll go with the flow of the market. I think my view on the Australian dollar, even though I'm bearish the US dollar, longer term I'm bearish the Australian dollar as well, and I think that will be a weaker currency relative to the US dollar. On a longer term chart, this is going back for 20-25 years. You can see that 80 cents has been a key level of support and resistance, particularly in this sort of period from 96 to 2006. Didn't get through there, um, and then it sort of bounced off there a couple of times. I mean, this chart, it does look like a decent bottom, but my view on the currency is really a fundamental one rather than a charting one, and I don't see the strength in the Australian dollar, the fundamentals of the Australian economy to justify a real rally here. I think this is mainly driven by a couple of some decent data coming out of the Australian economy, which is short-term data on jobs and retail sales and things like that, and on the US dollar weakness. And the iron ore price has done well in the last 6 weeks. That was down 30 or 40% in the first few months of the year. So I think that's more of a bounce there. The iron ore market is extremely oversupplied still, and that can't be good for the Australian economy and the Australian dollar in the medium to longer term. Some of the other charts that I'm following, I guess it's one that's driven by those currency effects is the Australian dollar gold market, and that had a real. So I've been talking about this trend upward for the last 2 years, and it's we had this previous trend, the bigger sort of mega trend for 7 or 8 years in the 2000s, and I'm looking for something similar now. It broke down below the lower end of that range, and I think this is a sort of a false break, and I'm expecting it to hold, and it did have a nice little bounce in the last couple of days. Some of those comments from the Reserve Bank about the neutral rate of the Australian economy being 2% higher than it is now, that was sort of driving the currency move, and gold was sort of sideways for the first couple of days this week, and that broke that medium term trend line. But I'm expecting it to move back into this range, and I thought this was an ideal opportunity to buy some of the mid to larger cap Australian gold miners. I bought Northern Star and St Barbara, Resolute this week on that weakness. They're all at decent prices. They're well-run companies. So if I'm a believer in that longer-term Australian dollar gold story, I want to be owning companies that you can sleep well at night, holding their shares, as well as some of the speculative trades as well. But the more sort of blue chip producers, I guess. Some of the other markets, S&P 500. I don't follow this one much. I just include it because it's the driver of the Australian market in particular. The general share market trend and sentiment. It broke out again each day, making almost all all-time highs this week. Can't really say much. I think previously in one of the videos I talked about when it had broken above this sort of 2400 level, you had a target of maybe repeating this move here, sort of from I think I said 2470 in one of the previous videos. We're kind of up there now, but it can keep going higher. It's sort of running on fumes a little bit for me, but I don't trade this market. I just follow it as a general sort of sentiment indicator of the broader market. Some of the gold mining indexes, I think these are struggling from the GDX, which is a larger international gold mining index. $2 or $3 billion market cap companies generally, plus that. And that's kind of in a bit of a malaise as well. You can see here extremely low volumes. So it's kind of trendless at the moment in this narrow sort of range. Hard to know what it's going to do there. If it's going to break lower, I tend to think it's going to break higher just on the fundamental views. The gold price is relatively strong. The companies in there, a lot of the constituents are generally doing quite well on the Australian market anyway. I don't hold the ETF, but I just use it again as a sentiment indicator. And the juniors, the GDXJ, it's pretty similar. You can see again that real drop off in volume as we've moved into the summer months in the US. This is probably a little bit of a stronger bottom. It's got that sort of general uptrend, but it's held the previous lows made at the end of last year. So I'm thinking this is still relatively on the stronger side, but not overly. But I'm expecting that to maybe catch on fire at some point, but who knows when that's going to be. So that's just a general sort of look at all the major gold related markets this week. As I said, on the US dollar price, it's kind of directionless at the moment. Short term sort of little uptrend here, but it's in that zone where we've bounced around between 1250 and 1270 sort of for a while. So I'm expecting that to act as a bit of resistance. That longer term trend line, again, maybe it doesn't matter all that much. It's going to have to break out of that pretty soon anyway, either way. So yeah, I'm cautiously optimistic on the US dollar gold market at this point.